Hi guys, welcome or welcome back, whichever the case may be. Listen, if you're a Bitcoin owner, you might be shitting your pants right now. I don't know, but you should not be. This is awesome. This is Cathie Wood from ARK. Very well versed, knows what she's talking about. Big money, pay attention. This is one of many videos I could have done, but I like the way she put the wording. So here we go. I'm not going to screw around. Let's listen to Cathie. I might interject here and there, but here we go.
Hang on for a beautiful ride. Institutions will become a very important part of this ecosystem, and if we use those two numbers that range 2.5% to 6.5%, you go towards the upper end of that, say 5%. That alone would add $500,000 to Bitcoin's price, just as institutions try to get a foothold in. So we're extremely optimistic about Bitcoin, and I'm more optimistic now after this correction. In the equity market, you call 20% a bear market. I don't know what they call a bear market in crypto. So I feel, though, that we haven't even begun the institutional movement into the space. And so just that one use case gets us to that kind of price. Of course, the volatility will be with us. My compliance department would be very upset if I did not add that. It's not going to be straight up. It's not a super cycle without 50% corrections.
I just wanted to add here that ARK is one of the big hedge fund players. So you need to listen to this lady, in my opinion.
One of the things that's happened is reminiscent of the beginning of 2017, when China shut down all of its exchanges and the Bitcoin's price collapsed. And anyone who bought on that enjoyed one of the most magnificent runs during 2017. Because what we learned is, fine, China shuts down its exchanges and the activity moves to Japan, Korea, Thailand, almost seamlessly. And when people looked around and said, okay, nothing happened there, this just shifted. And we think the same will be true of mining, by the way, and therefore mining will be more transparent than it is in China right now.
Let me just throw out there that since this interview was done, China has banned mining in China and shipped out all their equipment. That is awesome for the Bitcoin world. Just a heads up, just a little update. Thanks, guys. Pay attention.
I think ESG is the second reason that it has gone down. Environmental, social governance, primarily environmental. How is Bitcoin mined? A lot of institutions are asking that question. And ESG has become a very important strategy, especially in Europe, increasingly in the United States. And this was one more risk that it was going to keep institutions from migrating into this new asset class. This is a new asset class. And from 10, 11 years worth of data, we can see the low correlation of returns compared to other assets. Institutional investors have to consider this because certainly their competitors are, as another form of diversification and opportunity. And I think this put that off for a moment. But I think that the spotlight on the environment is going to cause something really interesting to happen here. So it's actually going to accelerate the movement into renewables. I think that's what's going to bring institutions back. And I think Elon Musk highlighting, is this a risk that I have considered adequately as I put Bitcoin on my balance sheet, my firm's balance sheet? I think he's going to be a part of the solution. So we think what has happened here is actually going to turn into good news. I will say, we heard that some institutions were taking advantage of this 50% drop in the price. They had been worried about top ticking. And I think they believe that half of the solution is understanding the problem in terms of ESG and just putting a spotlight on it. So I think some institutions have been opportunistic, but not very many. I think this was more of a showstopper, at least temporarily, for a lot of institutions. We took a look at how the ecosystem is likely to evolve. And I think we used, I think it was 1 million Monte Carlo simulations, just trying to figure out, okay, if institutions start moving in, where will they go? Well, they'll tiptoe in. A Mass Mutual, I guess, was $100 million for their general account, which is what it's probably 0.002% of their general account. So that's really tiptoeing in, and just gives you a sense of how far we have to go. According to those simulations, in order to maximize the Sharpe ratio, an institution might move towards, in crypto assets, we did it on Bitcoin, 6% of a portfolio in Bitcoin, in order to minimize volatility and enjoy the increased return associated with crypto. That percent might be more like 2.5%. So Ray Dalio earlier this week said he'd prefer to own Bitcoin than bonds. Now he's worried about a deflationary bust. And I think the truth actually is somewhere in between. He is worried about the counterparty risk that is going to occur because of a deflationary bust in the global ecosystem. So think about it. We're talking about a hedge against inflation and a hedge against deflation. That's pretty good. That is pretty darn good. I don't think I know of another asset, maybe gold, but no, I actually think this is the first rules-based monetary policy, global, stateless, and trustless. So I think we're on to a completely different animal here, and it's pretty exciting.
And there you go. It only takes 5% of the whole world's assets to go into, which they will, into Bitcoin. They have no choice. We're not even talking world currency here, which is a whole nother subject. 5%, $500,000 per Bitcoin. That could happen soon, sooner than you think. I believe it. I hope you believe it. If you're watching and paying attention, it's going to happen, my friends. It's going to happen. Listen, share, like, subscribe, whatever you feel good about. I appreciate it all. I appreciate you. I hope you appreciate the channel. I hope you get some value out of it. Peace, love, and karma. Till the next one.